Well, let's move. Just before we get an outlook for trading at Nigeria's equities markets today ahead of the opening bell, let's take a look at the latest happenings in the banking space. Liquidity constraints in Nigeria's banking sector continues to make headlines as banks struggle to adjust to new changes in regulatory requirements for banking sector funds. And meanwhile, in the small and medium enterprises space, there is increasing focus on gender-based development finance. Jude Anele, head of retail banking at Diamond Bank, joins me now to look at recent developments in Nigeria's financial sector. Thank you so much, Jude, for joining us.
Good morning.
Okay, obviously the biggest story making rounds in Nigeria's financial space is the liquidity constraints. We're looking at the cost of lending among banks hitting multi-year highs. Just yesterday alone, we saw core money at the interbank market hitting 55.8%. Now that's the highest we've seen, perhaps even ever. But then let's take a look at how this could be affecting the net takers at the market.
Okay, absolutely. The point was that it was a nightmare for most treasurers of banks yesterday. In fact, market opened at almost 100% yesterday. It came down to about 13, went up to 45 and closed at about 28.30. And I think this was riding on the heels of the planned deductions, AMCON sinking fund deductions that were supposed to be made yesterday. That came in very late. So all throughout yesterday, most treasurers of banks were speculating whether it was going to come or not. That was why it was a seesaw yesterday. But what you have now is that deduction has been made, and most banks are now trying to adjust to it. But what you find is that liquidity is tightening the more, and lending rates are going to go up, especially in the small and medium scale areas and sectors.
Now, before we go into the SME space, talking about these deductions being made from the banks, we're expecting to have some funds coming in from the Federal Accounts and Allocation Committee, FAC funds, between 400 and 500 billion, perhaps tomorrow or maybe Monday, and of course maturing bills from the OMO markets today. That is expected to provide some relief, but would it be short-lived, or how long can those funds last in the system?
Well, typically, such funds, when they come in within a week, they are out again. Of course, they are utilized and they go out. But it will help, cushion the impact of the speculation that have gone on since yesterday, between yesterday and today. So what you find that will happen is that FAC comes in tomorrow or maybe on Monday, worst case. Most of next week will be, a little bit moderate in terms of rates. But the volatility will continue after next week when most states will begin to utilize their funds.
So are you saying we could actually see for the perhaps overnight money and core money going even as high as 60–70%?
It's possible the way it's going, because it's very, very tight for some banks right now, quite tight. And nobody is sure what is going to happen. And in the Monetary Policy Committee meeting that might come up next week, people are not still sure what will happen, whether it's going to keep rates at 12%, NPR. And if that happens, whether the CRR will remain the way it is, the cash reserve requirement. And most of this is because there is no certainty as to what will happen. Then people are still speculating and hedging. So the net placers of funds are keeping close to their funds. The net takers are scampering, quoting high rates. So it's still going to be very volatile in the next 1–2 weeks, the way we see it.
Now, I know there's the MPC meeting next week. There's a lot of uncertainty. Nobody knows what the MPC, the members, will do. But in terms of what a likely scenario could be, let's hear your own thoughts on what the monetary authorities could do.
My view is that what has informed most of the decisions the Monetary Policy Committee has taken in the recent past, maybe the past 3–4 months, is what is happening in the polity. What is happening relative to elections, what is happening relative to 2015. They know the government is spending, the government is going to spend a lot of money. They know political parties are going to spend a lot of money, and this will create some level of inflation in the market. So what CBN is trying to do is to have creeping inflation and try to tighten liquidity in the market in anticipation of that. So I believe that most of it is not economics, it's more of politics than economics, but the two sometimes. So the CBN is trying to rein in inflation, at the same time tighten liquidity. But what happens is lending to the real sector is constrained, and if you can't lend, the little you can lend, the rates are high. If the rates are high, that will also drive inflation. So most times you don't understand where this all falls into, and it's not beginning to be very clear to people. What CBN wants to check inflation, but at the same time, some of the measures they are taking is also creating inflation at another end. So it's a little bit confusing right now.
No, well, confusing, and of course, looking at the broader impact on the economy, you just mentioned that we're going to continue to see perhaps a tighter interest rate environment. But taking that to the SME space, we know that the CBN has made 1 or 2 interventions. We know about the SME, the 200 billion naira fund, and we know also that there's an increasing focus on gender-based finance. But will they be insulated from all that's going on?
Well, somehow, the point is that, yes, that is even not direct lending per se. You still have to go through banks to access those funds. The point to be made is that Nigeria cannot continue to depend on these interventions, and I've said that several times. They are good to stimulate the economy, but the stimulation is actually on the supply side, not on the demand side. What I see these interventions mean is that we want to encourage banks to lend to that sector, okay, and not really encourage the demand side, okay, people come and borrow. The idea is that once banks lend to that sector and find that they can actually lend successfully in the area or profitably, they continue to do that on their own. But this is not happening because there are other fundamental issues that needed to be taken care of that hasn't been taken care of. So I think that interventions, yes, they will come and go like others. It may not make as much impact as we believe it will make. Well, should we not intervene? I think they can continue to intervene, but what we see that nothing much has changed. Now, on the gender side, that is also very good. This is not the first time we are doing gender-based interventions. And we still find that most times these people cannot access these funds because banks themselves still don't know how very well to lend to that sector. So whether you're a woman or whether you're a man, a male entrepreneur, the point still remains that if banks don't want to lend to that sector, they will not lend, irrespective of gender. So we need to deal with the fundamental issues first before we go to gender. That's my view.
No, I imagine that if the CBN is going to be disbursing these funds through the banks, of course, that it probably has already has laid down rules as to who should qualify and who should get the money. So are you saying that it's still going to be extremely difficult for SME, small entrepreneurs to access these funds, even though the funds are there just for them?
What you must understand clearly is that these interventions that go through deposit money banks, maybe primary mortgage institutions, microfinance banks, as the case may be, the conditions that are laid out still remains that these banks will still use their risk acceptance criteria to qualify these borrowers. Okay, so if ordinarily by risk acceptance criteria does not let in too many borrowers, it will still not change anything because somebody has come in with some cushion. That's the point I'm making. So do we still require collateral to borrow? The answer is yes. Is it constraining borrowing? The answer is also yes. So whether there's a cushion or not, those conditions remain there, which is why I said there are some fundamental distortions in the banking sector itself, lending to this sector. Until we go in and deal with those distortions, this intervention will not work the way central bank wants it to work.
Okay, so let's talk about your own outlook for the MPC meeting next week. A lot of talk has been going on about that, what the CBN could do. But then many have argued that they do not think the CBN will tamper with the headline rate that's still at 12%, that it might begin to tighten further. On the other hand, others are looking at saying that, look, this is just a storm. We need to just, stay within the storm, weather it out, and just because the CBN is just nervous about electioneering spending into the early part, second part of 2014, of course, ahead of 2015. So they're saying that, look, it's just a temporary situation, that we might see rates easing going forward.
It's possible. Well, it's all speculation, clearly, and I agree with those that believe that CBN may not tamper with the headline rates. It may still remain at 12%, or they may even inch it up maybe by more like 500 basis points, as the case may be. But my view remains that whether or not they increase it a bit or reduce it, they are still going to try to tighten liquidity in the market because of elections, whether we like it or not. And that's the way the central bank governor his body language has shown that over time. I don't think anything has happened to change that. Maybe next year. But remember, as we move into 2014, it gets even worse in terms of how much money that we throw into the system for elections. If it's that way today, it will be worse in 2014 because that's when the real action starts. That's when the real spending starts.
All right, thank you so much, Jude, for that perspective on latest developments in Nigeria's financial services space. Jude Anele, head of retail banking at Diamond Bank.